Word from Statistics Canada today that consumer prices and the inflation rate have eased by 0.1% from November to December. This comes, of course, after another volatile week on the markets. For a little week's end reflection, Nick Bontis joins us live now from the DeGroote School of Business. Hello, Nick.
Happy Friday, Connie.
Well, happy Friday to you, and thank goodness a lot of people are saying it is Friday. First of all, Nick, what do these newest numbers about inflation tell you?
Well, the inflation rates, as you mentioned, are in check. That's actually positive news for all Canadians because now with the lower GST rate from 6 down to 5%, that means our purchasing power has gone up, and it's always good to get more out of our same dollar. We also notice the interest rates are lowering slowly as well, and that's good news because I think it'll help restart the real estate market and the stock market. We also noticed this week our Canadian dollar got a bump up closer to the US dollar, so that's good news because what ended up happening in the last couple of months, as you recall, was there was a lot of complaints about discrepancies of pricing, especially for cars and books. And what's happened now is a lot of the Canadian retailers have dropped those prices significantly, so Canadians are going to benefit from that. So a lot of things are coming down. The only thing that's really still going up is oil prices. So for those of us driving cars, we're still going to have to pay for a lot of expensive gas, and for those of us heating our homes, that's going to be expensive as well for the next couple of months.
At the other end of things, though, Nick, with prices dropping and markets vulnerable, how are some of our high-tech, high-performance stocks doing, like RIM, for instance, from both an investment point and also, well, so-called electronic toys take a hit at the retail level as belts tend to tighten somewhat?
Yeah. Well, RIM, of course, is our Canadian darling stock. It hovered in many instances, actually, in the last few months as the company with the largest market capitalization in all of Canada, so that's quite amazing. RIM took quite a significant hit when the markets tanked the last few days, but it's actually recovered quite nicely. They sell a lot of their BlackBerries to the financial services sector, especially in the U.S. So with the subprime market and the credit crunch down in the U.S., there was fear that maybe RIM would lose a potential significant part of their revenue in the next little while. I don't see that happening. Even if corporate profits are not as high as they could be in the U.S., a lot of people are going to have a very difficult time in giving up their BlackBerry. So for those of you out there who are interested in investing, RIM stock is now at a 25% discount from its all-time high. They keep on beating the street estimates. What that means is they predict what revenues are going to be, and then they always perform above that, and that's why their stock keeps on doubling year in and year out. And one thing that I want to make sure our viewers don't forget about RIM, they still have not sold many BlackBerries at all in China, India, or Africa. So once those countries and continents come on board, I think there's a lot of upside for RIM.
And just quickly, Nick, what will you be watching for next week?
Well, obviously, the U.S. Federal Reserve Chair Bernanke and his people are going to decide what they're going to do with interest rates. They're probably going to lower them significantly. I'm hoping the TSX makes up some of its difference in the stock market, and I also hope to see the Canadian dollar stay on parity with the U.S. dollar for the foreseeable future.
All right, we'll see what happens. Thanks, Nick. Have a good weekend.
Thank you.